I'm about to make over $600 on NVO with a trade that I put on just 4 days ago. I saw this repeatable thing that happens over and over and over again in this market, and I just placed the trade and let it run. Now it did exactly what I thought it was going to do, and I'm able to buy back these options that I sold off and make over $600. And stay to the end because I'm going to show you two stocks that I'm currently in right now and could be great opportunities for you. Let's get started right now. So this is NVO, Novo Nordisk, and 4 days ago I saw that it had gone on a 3-day run up over the Bollinger Band. Now if you've been following me for a while, I constantly put videos out where when stocks get outside of the Bollinger Band, right here, over and over and over again, when they get out of the Bollinger Band, they want to work their way back in. I mean, go to any stock and you can see that this happens over and over. Actually 90% of the time. So when I see something that's especially gone on a 3-day run and it had a lot of good volume behind it, when I see something that's gone on a 3-day run outside of the Bollinger Band, then I want to sell calls up above it. If we narrow in a little bit closer on that 15-minute chart, I actually sold the calls right around here at the end of the day. Because what I could see is that on that third day, we clearly tried to break up, right? In the pre-market we came up and we couldn't get up past that in the actual market, and then we had these nice big red bars beat it down. And then we can see here that volume was relatively slow throughout the day. There was a good chunk of volume in the morning. That's most likely them selling off to make profits, and then we see a real big slowdown of volume throughout. So I actually sold calls above right at the end of the day on this day. So then we see as time continues on, the next day we're down, we're kind of down, and then obviously today we've had a really good beat down as well. Now I'm trying to buy back those options that I sold. So we can see here I'm up $618 on the trade, and I'm trying to buy them back now. So I actually sold the 100 call and I bought the 105 call at the time. For $3.19 I sold it, and I bought one for 98 cents. And this is called a vertical spread. So it's super easy to put that on. I'll show you in 1 second. But now you can see that the calls are only worth 17 cents here, and then 2 cents. So if I sell something for $3.19 and then I can buy it back for 17 cents, I actually end up making money that way. It's the same principle of shorting a stock. So how do I actually put on this type of trade? At the time it was up here, right? So I just right click on the sell, I come over to sell, and I go vertical. And the program will actually set it up for me. Sell one, the 101, and then I usually do 5 wide, which is just 100 to 105, 5 wide spread. And I can get a credit for that. So you can see that I can actually sell this at 15 cents, which is what I'm trying to buy back now. So we'll see if it ends up going through. All I would have to say is that if you see stocks that are flying out beyond the Bollinger Band, then try not to hop in and just, grab them. Now, if you have volume off that first day and it's really great, sometimes what I'll do is buy a contract to run up and actually make some money on the way up. And I did that on Lulu recently. And this would have been an amazing trade, right? But typically, once you get to that third day beyond the Bollinger Band, you should really begin thinking about selling vertical spreads or selling calls up above the price, because then when price eventually comes down, you can buy it back and make money just like I've done here. Now, let me show you the two other stocks I'm in. So I'm in Lulu right now, and Lulu I was able to make $340 or something on this run up here. But then I sold calls up above because I knew that the price was coming out beyond the Bollinger Band, and it was super overextended, and we had this really big red volume on that day. So I sold calls. Now I'm looking at it here, and I see that we did kind of the same thing, right? It tried to get up, it couldn't, and it got beaten down. So I sold calls up here once I saw, okay, this is a day 2 move. We're going to sell the calls up above. And you can see that currently I'm up $421 on that trade. Nice and easy, right? So let's look at Humana. Now, I don't think I'm actually up on this one, but Humana did the same thing, right? Let's go to the daily. It came up like this, right? And it extended itself really. Look at this extension. Extended here. So this is probably something that has to cool down. So we had an extension, and then we don't even really have great volume on these days, right? So that's something that I want to sell, and I'm hoping that we can come back down to that 15 EMA. So I sell calls up above here as well. And I'm currently up $75 on the trade. So we'll see what happens. But I sold the 520 call, and the 525 call all the way out to just 8 days from now. So that might be something that you might want to get into. Now, I'm not a financial advisor. I'm not telling you to run out there and go get this right now, but it's something that you might want to pay attention to. We'll see if it works. But just so you can see, since you're still watching the video, I sold the 520 and I bought the 525, and I got a credit for that. And we'll see what happens. If I go to the Analyze tab, you can see as price works its way this way, then that's where I have the potential to make 840 because I sold 3 of them. So I have my stop loss set at, if it goes over 527.83, I'll lose $150. So if we go over 528 essentially, over this red line, then I'm going to have to get out. But we can see on the 15-minute here, we're starting to do that trail down that I was looking for. So thanks for sticking around this long. I hope a couple of these stocks give you a great idea of how to actually start trading in a bit of a different way. Like and subscribe if you found some value, and I'll catch you on the next one.